So we started off with we have to be ready for anything, and I think this year is that's more true than it has been in the past. Like we could see trade war escalate. Like there's already talk that okay, we're done with China, now we got to do the EU, which is probable. We got to go through that with the EU. So we're going to see trade issues with the EU, almost guaranteed. Or maybe the trade war with China gets a better resolution. Maybe that's the thing that markets are waiting for, and markets go up because of that. Maybe company profits grow because their comparisons are so light. Maybe they grow because last year was a decline, so it's easy to beat that. Because we can expect kind of a 6% average long-term growth of corporate earnings. Maybe they decline. Maybe last year was a signal that things are in decline. I don't see that really, but it could be something we have to be aware of. We have to be ready for either way. I think I'm in the economic growth camp. I think there isn't anything that looks bubbly out there. Corporate debt is possible. That's not the kind of thing that unwinds everything. But the things that are traditional bubbles, there's not overinvestment. There's not, too many people buying cars. There's not too many houses being built. There's not these things that typically will lead a decline in the future. We don't see those things.
You don't have war there.
No, we don't have war there. Part of that is intentional. War has a very short-term effect. We still buy socks and underwear. We still buy toothpaste. We still buy food. From an economics and market perspective, it's a short-lived issue. Unless it's World War III, which that's a low probability event. So low probability that's not on anyone's radar. It's on some people's radar. It's not that. It's a low probability event. So bull market, bear market. I don't think we'll see either a big bull or a big bear next year. I think next year will be we'll call it a rebuilding year, right? We'll call it a year where we've already had the earnings. We probably have the stock growth to repair 2018 and to look forward into 2019. We sort of built some of the returns expected in 2020. We sort of built them into 2019. Okay, so this is an interesting trend. Have you heard this clicks to bricks? So Amazon has retail stores now, right? So they drove all the mom and pop businesses out of business, and now they have retail stores that you can go in and buy merchandise, you can return merchandise. And the reason they do that is because what they've found is people buy things on Amazon, they look for the cheapest deal and they buy the cheap thing. But if you go into a store, you're going to buy more expensive things. So now they're going to, we need stores, and we're going to put expensive things there so people will buy the expensive things when they go in. Another trend, this is April of 2019. You guys know this? April of this last year, renewables became a larger source of electricity than coal. Just naturally, right? And that will continue. Does anyone here do any gig work?
Used to.
Used to?
Kind of.
Yeah?
Yeah.
So I didn't know that 35% of the workforce does gig work. And remember, this is not full-time gig work necessarily. This is someone's side hustle, right? 60% freelance by choice, which means 40% freelance because they have to. 50% say it's a long-term career. So 50% of these, so 25 million, so that's 18% are full-time gig workers. And actually, that makes it, has anyone been on Upwork? Upwork, you can get anything done for an hour, anything. And you have, so I write a lot, you guys know this, but I'm a horrible writer. So when I don't have David to edit for me, I pay someone on Upwork to edit for me. And I did a little test run, and I hired a $105 an hour editor, and I hired a $35 an hour editor, and I hired a $55 an hour editor. There was no difference. Really. All decent edits, right? Different, but...
Yeah,
so,
instead of charging.
I'm now... Yes.
Question, how
You're already
are the
paid.
gig workers factored into the unemployment rate?
Say it again?
How are the gig workers factored into the employment rate?
So the unemployment is a survey. So you say whether you're working or not working, or whether you're seeking a job or not seeking a
So
job.
whether you're working 1 day a week or 5 days a week, you consider employed.
There's different levels of employment, and part of it is, are you working, and part of it is, are you looking for work? So you can actually be working and looking for work. This is 5% of the US economy right now. So do you remember when internet sales were 5% of the retail? Now they're over 50%, well over 50%. I don't know if that happens here, but it's something to keep an eye on. It's a huge and growing part of the economy.